Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're jumping down into Polygon's 𝗲𝗡, taking a look at what's been going on most recently and what we would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now in the description down below you will find links to our Discord server, a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check that out today. And also in the description down below you'll find links to our Patreon services where we offer a lot more for our Patreon members down in Discord. Everything from 2 AMAs, project reviews and write-ups, trading, accumulation zones, what we're buying, what we're selling, etc. So if that's your bag, why not check that out in the description down below. Also you'll find links to the new Cheeky podcast as well, so on your commute to the office you can stay well informed with everything crypto. Why not check that out if that's your bag. Okay guys, let's waste no more time though, let's jump right down into this. Here we have 𝗲𝗡 paired up with USDT on the hourly chart, and Binance is the data source. Now obviously we're tracking a lot of different moves here with 𝗲𝗡. It's actually quite complicated and complex, so definitely join us in Discord if none of this is making too much sense to you. We can kind of give you some materials to help you understand what Elliott wave theory is and why we're mapping it in a very specific way, and hopefully it gives you a good understanding as to actually what's going on in the market. So if you want to know more, join us in Discord. We have got the materials readily available. So what we're going to do is we can go into it, acknowledge that we have this 5-3-5 structure here, okay, and we move back down lower than this high point. Basically this means that this is just corrective, okay. So what I can do is I can now remove these 5-3-5. A 5-3-5, by the way guys, is called a zigzag, and a zigzag essentially is an ABC, okay. So we're just going to go A, B and C for simplicity's sake, okay. So we don't have to map out 5-3-5. So coming down here, this is where it gets really complicated because we've got a lot of overlap, okay. So in Elliott wave theory, overlap usually indicates one thing: corrective, okay. And when we say corrective, what we actually mean is short term, okay. It doesn't mean there's a trend there. It's not a trend based pattern. However, I do think what I should be expecting here is a trend to the downside, okay. So all of this corrective patterns inside here I think are actually leading us into this move. So I'm going to think that actually what we have here is a leading diagonal, okay. Usually a really complicated pattern to spot, but when you have overlap with all of these kind of moves, essentially what you end up with is a series of corrections, like 3-wave structures and then a 5-wave structure, which we can see right at the end here. So I'm thinking that this is a leading diagonal, and that leading diagonal is essentially just wave 1, okay. I think we're then going to be bouncing up into a wave 2, and I'm going to run you through what that looks like in a moment, and then we drop down into a wave 3 low, a wave 4 high, and then a final 5th wave coming down lower, okay. Now obviously these are not correct prices, this is just an estimate, and kind of gives you an idea of the structure that we kind of should be expecting to see based on what would be here, okay. Well, not only here but also in this upward direction, that zigzag pattern, right. Now if I come up into our 4-hour chart and I just zoom on down and just bring this out, you can of course see that the whole thing is a 5-wave drop, okay. And our 3rd wave is this low point down here. We had the zigzag taking us up to complete wave 4, meaning that we are looking for a 5-wave drop down into this low range, of which I estimate between 19.7 cent and 26.4 cent, okay. So we can kind of see that from an Elliott wave theory perspective, our trend is very much down, okay. Our trend is down. We haven't seen any trend based patterns upwards yet, okay. So until we see a trend up, we should therefore understand that the direction of the move is down, right? We are going down, not going up, okay. So when we know that, we can then obviously prepare that if we do see the price move up, it's counter to the trend, okay. And when a counter against the trend is obviously increased risk, okay. For example, if you were to short the market and you were to short it, let's say at the bottom of wave 1, and we then start to move up, you would know that the patterns that we're seeing here are usually 3-wave moves and top out at wave 2, and then there's a significant drop taking us down lower, meaning that, you know, if you're going with the trend, you're usually going to be okay. However, if you were to go long and and you're going long at the top of, let's say, wave 2, there's a very limited amount of chance that you're ever going to make anything out of that, right? So always know that if you're going against the trend, then you are potentially going to be running a higher risk of losing. Okay, so make sure that you understand the risks that you get involved. Now, I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions on the data in the charts as I see it. And in the case of Polygon's 𝗲𝗡 here, I would say the trend is down. And I think this is pretty obvious. I think most people know that. The trend has not reversed yet, okay, as in we only had a corrective short-term push up, and we are now trending back down, okay? So there's no reason to think that we have reached the bottom here for 𝗲𝗡 just yet, even though I did actually buy some 𝗲𝗡, at a pretty decent price. I still will probably look to accumulate more at a lower price, if it comes to it. Okay, so with that being said, let's jump into this, okay? So if we are expecting a wave 2, okay, a little push up higher, we first of all need to see what the momentum is looking like. So over the weekend, I wouldn't expect too much. It's kind of just a bit of a boring weekend, but we are oversold on the hourly chart. So again, that would indicate that momentum is about to shift back to the upside. On the 4-hour, we are looking for corrections. So again, we're fighting against the macro, which is down. Okay, the 8-hour is actually almost back up in the overbought area, and the daily is moving down. Okay, so again, we are looking to finish off that final 5th wave move to the downside. So essentially, what we've kind of got going on here from a stochastic RSI perspective is that we are likely to see a small push up higher, and then a significant drop to the downside as we look to finish off and actually find the bottom somewhere actually between 19 cent and 26 cents. So pretty good kind of accumulation zone, right? It's basically another 50% drop, right? So it's pretty significant. But we have to first of all push up a little bit higher. So when we take a look at this structure here, it is all corrective going up. And we are reaching this kind of double top scenario, but I think we're going to smash past that. So let's go ahead and kind of give our estimates on where we think this is likely to go. So if I go ahead and just measure that distance, so that's a whole entire 100% move of this low. So I grab my A and I grab it here, put my B down at this low point, and then our C wave should kind of go up to about 53.51 cent. Okay, so what I'll do is I'll just go ahead and mark that up right there, 53.51. I'll then just delete the fib. Now, what we want to do is we want to also check the most typical wave 2 retracement zones. Okay, so where does it typically retrace to, and all of that kind of good stuff. So if I grab my yellow box here, and we can see that actually this would be falling a little bit short of the typical retracements for this. Okay, so typically we would actually be aiming for this yellow box area. Now this would actually come in right on this 50% level, which is basically 53.9 cent up to a higher of 88%, which would be basically 60.11. Okay, so straight away we kind of see that we are a little bit on the shorter side of things. I'm going to just park these in here so we can kind of see where these go. Let me just pull that in. It's actually 1-1. So here we can see, right? So if we go up to 53.51, we're falling short just ever so slightly, but it could of course overextend, just enter this yellow box area and then reverse on down. So the wave 2 looks like it's going to be on the shallower end of the spectrum here, and then we are likely to see a reversal to the downside. Okay, and it should be pretty significant. It should be 1.618 of the move of wave 1. Okay, so if I grab hold of, I don't know why it's not letting me select the fibs these days. Let me just grab this and move that over. And if we move this over to our theoretical low point, then our third wave low should theoretically come down to about 27.4. And then that's basically an impulsive trigger. We then bounce up. Again, this bounce to the upside here would normally be approximately, come on, let me grab this. Approximately, if I grab hold of that, the 382, so a 38.2% retracement, so that puts it right there. And then, of course, my mouse is not clicking today. And then, of course, if we grab hold of our fourth wave and we put that to the 382 from the low, our fifth wave should be somewhere in this low range. And I'll just go ahead and draw that up right on here, like so. Okay. So under typical retracement levels, what we've kind of got is in a refined area of about 23.5 to about 25.9. So the lower end of the spectrum here, although possible, doesn't seem to be necessarily what is going to map out based on these current moves. But all of this is subject to change because these are just estimates, whereas we have to have the reality of wave 2 hit, we have to have the reality of wave 3, the reality of wave 4, before we can predict out the low of wave 5. So although these are reasonable estimates, we can't say that they are definitely going to happen or anything like that. But it does give us a bit of a range and a bit of a target, a bit of a thing to think about here on this final retracement for Polygon's Matic, and where we might want to start thinking about accumulating ahead, or if we are in Matic, maybe thinking about what we want to do. But do know that I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions on the data in the charts as I see it. And for me right now, it does look like we are in a trend to the downside. We have got some good accumulation zones right down there below 26 cents. Guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done, and out of the way, I hope everyone has a fantastic day, and I will catch you all in the next one.